Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Over the past week on Friday, we saw that we did have a downgrade by Moody's for American debt. You would think from that point, we did have a sell-off Friday after hours. That sell-off did continue pre-market this morning. Markets gapped lower, but then the market staged a remarkable recovery, almost so much so that it's kind of puzzling. It's actually starting to worry me that there's a little complacency in the market where we've dropped down 20% or so in April. And then now look at the markets. They're right back near and above where the markets did drop there in April. So we have all-time highs on the horizon. Will those be reached? Let's take a look at levels to see how and if the probabilities dictate that that can happen. Into the heat map here, as you see on the left-hand side of the screen, Dow Jones is now up 0.8%. NASDAQ's only down 0.24%. S&P 500 is now up 0.53%. U.S. oil is up 0.3%. Gold is up almost 1%. Nice move on gold. And Bitcoin is basically flat, down slightly, 0.85%. As we have a mixed day here on the left, we do also have a mixed day on the right-hand side of the screen. A lot of stocks just kind of staggering about, but everything was in the red at the beginning of the day, and a truly remarkable recovery that the markets had. So right into the spiders we go. And really, on that note, let's look at the 10-minute. Here is where the markets opened this morning. And markets, from the moment they opened, just initially kept going higher, 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 pause, and then broke higher again, and then continued sideways. One thing I like to take note of, over the years, there's been a lot of fake prints on the screens. And you can see these fake prints highlighted on the 10-minute chart of the spiders. These fake prints typically play out, and what they are, they're basically contracts and or shares that are bought after hours. They get pushed through during regular market hours so that they appear and register on the charts. Usually when these fake prints appear, it foreshadows price action moving in the direction of those fake prints. We'll see in the coming days if price action does come down back to where the lows were today when the market did open. Now back to the daily chart with analysis here. You can see that we on the 10-minute, we were poking above this recent trend line. The reason I drew this trend line, we did have a high placed in the markets at the beginning of this year on January 24th. And what I did there is I strung this trend line along to the very next pivot and connected it all the way down, because in essence, what happened here was a bull trap scenario, which brought price all the way back down. So that told me that this trend line, when price got back up to it, should be significant, at least highlighting the fact that we retraced almost all of this negative sentiment on the market. Truly just a fascinating move, one that I think is about to stall out. I'll point your attention down here to the bottom of the screen with the RSI. We are now pushing 69.45. However, when I click over to the weekly chart, look at this RSI down here at 57. That tells me we still have room to run in the markets. Albeit strange, even with this rapid recovery that we've had, we still have some room to run. Now, the daily chart is a more short-term analysis compared to the weekly. So keep that in mind. Weekly time frame dominates. So the weekly time frame showing us we still could go higher. We need to prepare for those levels. The levels above that I have are 598.25. Followed by our all-time highs at 613.23. Pay attention to these levels and how price action behaves if it gets up to this range. One thing I thought that was fascinating too when studying the spiders today is if this price action continues moving higher and then does pull back right down onto this blue top end of the parallel channel, since we have now confirmed above, this area is going to be major support for the spiders, which could provide a springboard effect bounce to get to the all-time highs or even higher. So that support area roughly is 575.46. And you notice that corresponds with this pivot right here. So keep that on the radar for any move down. It should be support. But then conversely, moving up 598.25 and 613.23. Into the Qs. The Qs did look like they were about to start breaking down also today, but notice where we're finishing right back here at the top of this mammoth run that's occurred. So that tells me that all this action right here is beginning to form bullish consolidation. Now the Qs are a little bit more overbought than the spiders on the daily. However, again, click the weekly and we're down here at 58.21 on the RSI, all saying there's still a chance for price action to continue higher. Next resistance areas, 525.03. then 540.81. On the downside, support is at 493.46. That corresponds with this pivot low right here. And you can string that across and see other pivots that occur right here in that area too, and a pivot low right there. So that should be great support for the Qs. Into the SMH. SMH also looked like it was about to break down from this very long-term trend line that's coming back over here to the lows made in April of 2024. We did have price action gap down underneath that today, but has since recovered. That tells me again, like the Qs, we've got bullish consolidation going on here. Next movement up with minor resistance is going to be 249.42, followed by 260.05. Should this trend line break, we're coming right back down here to 232.37, and that should be a rapid fall down there if this trend line breaks and holds. All right, into Bitcoin. Bitcoin over the last couple of days did pierce up over 107,000. Nice move on Bitcoin. Bitcoin even looked like it was about to tumble this morning with that downgrade news from Moody's, but then since has recovered and pushed back up quite nicely. One thing I want to point out, though, I've been highlighting this parallel channel. The top end of this parallel channel is $116,000. So that shows that Bitcoin's got a legitimate shot at pushing up to brand new all-time highs right there at $116,000. Again, notice the RSI. We're starting to have divergence here because the higher RSI recorded here is actually now lower here, but price is now higher than what's here on the charts. So with this divergence, that foreshadows a fall. Now, it may not be a fall to new lows in this year, but it may be a fall down to support, such as down here around $96,000. Another thing I want to point out on Bitcoin with technical analysis, notice on the weekly chart, we have now run up. This is going to be 1, 2, 3, 4, 5, 6, now 7 candles on the Bitcoin chart. If you know anything about time counts, that's extremely significant. And if you don't, get yourself educated. This stuff is so powerful, especially when we're moving in a rapid direction in either direction. Understanding time counts, how they behave, where they find resistance is critical to understanding the charts and also making good trades. So do yourself a favor, get educated. We've got tons of great videos here, whether it's the Winning Trader series or my Mastering the Overnight Trade. Goes over time counts specifically in the first module because I feel and I know and seen on the chart so many times it is imperative you understand time when making trades. This will help you understand that. Okay, so back to Bitcoin. Also want to point out here, look at this on the monthly chart. We have a monthly topping tail on Bitcoin. So even if Bitcoin this month reaches new all-time highs and touches the top end of that parallel, it could still retrace and come back down as long as price finishes underneath the high of this candle at $108,388. This topping tail will still be intact and will likely still force price action lower on Bitcoin. Into gold. Now, gold, speaking of topping tails, you can see exactly what happens when topping tails form on the chart. It forces price action lower, at least for the near to midterm. Right now, we see gold has bounced up off the first area of support and is now starting to form bearish consolidation. We'll see if this matures over the next several trading days. If so, next area of support at $3,080, followed by $29.53. Into silver. Now, silver's put in some great bullish consolidation here. And if you remember, I've called out an inverse head and shoulders potential for silver. So again, it's matured. It's ready to start ripping either in one direction or the other, but probabilities are now shifting for silver to start pushing higher on the charts with this formation. If that occurs, if we break above this trend line and confirm, I have my eyes up here at the major move of $38.97. So silver could be on and looking for a pretty good run. Keep your eye on this declining trend line for a break above and confirm, and that action will probably start to play out. Now, keep in mind, price won't go straight there. We'll have areas of resistance and pullbacks, but that's where the completion of this sort of pattern will take us. Into U.S. oil. U.S. oil continues to struggle underneath this trend line. Still not too much has changed here on the charts, except for we're starting to form an inverse head and shoulders pattern minus this candle. This candle's the outlier that somewhat negates that pattern. All the while, I won't measure it to have a designated target, but still this pattern, if it continues out and say we start consolidating under this line, will be bullish for a potential move up on oil. So watch in the coming days there on that trend line. Trend line's currently at 62.93. Into nat gas. Nat gas saw a little bit of the opposite, coming down right and hitting the first support area on the charts here at $3.38. Now, since you notice too, it's now confirmed under this trend line, now making this area, instead of being support, this area is now resistance. So the resistance here on the charts is at $3.60 for nat gas. As you see, I'm making that change right now. And then also, I did want to point out something else that I found on the chart. Look at this, and this is several steps away though. But if you string this trend line across like that, you can notice that there is starting to form a head and shoulders pattern. Now, should nat gas continue to sell off and break through this 313 area, but most importantly, break this neckline, that would then trigger that head and shoulders pattern for nat gas. And this could be a substantial move down on nat gas if this does occur. As you see down here on the charts, the measured move is all the way down here at $1.09. So this is going to be critical areas for nat gas and trading over the coming weeks. Can it save itself? Can it make a move back up and test this trend line? Can it bust above and negate this pattern that's occurred here on the charts? We'll see in the coming days, but the horizon out for nat gas is now pointing us to a significant downfall should these steps occur in breaking these trend lines. This trend line of the neckline is right at the $3 mark. Into the 10-year yield. With this downgrade news over the weekend, we did see the 10-year yield push higher earlier today, but since reversed course. But notice where it stopped. Right here on this declining trend line. As I mentioned, that is the inverse head and shoulders pattern on the 10-year yield. There is still a significant chance and probabilities that we could break higher above this 10-year yield. Should that happen and confirm, we're talking about 5.289 on the 10-year. This would be very troublesome for any sort of individuals and also businesses making and interested in making large purchases, as interest rates will be very difficult. And the last time we had interest rates this high was right before the housing crisis and the Great Recession in 2007 and 2008. You can almost guarantee with housing prices that have now doubled since 2020, it will be almost impossible for a lot of folks that even currently own a home to get back into buying another home with higher interest rates and with higher cost in housing as well. So this would be very troublesome for the economy. Keep this on the radar, especially this declining trend line right here, currently at 4.546. Into United Health, I covered this briefly last week, and I was explaining how the volume is a significant indicator on the charts, showing that price action likely is reversing in course, especially after this rapid decline we've seen on UNH. Not only did that volume give us insight into a bounce, the bottoming tail did too. So we had two great factors telling us price was likely going to continue up higher, and it did so again today. And also with confirming now a move back above this long-term inclining trend line. Now, this trend line was taken all the way back here from this pivot in the year 2016. So you can see now with price action going back above this trend line, any pullback on UNH right here to this 292 area, essentially anything under $300 could be a good buy-in opportunity for a long on UNH. Watch out for any sort of pullbacks for an opportunity to buy there. Ultimately, even if we get a 50% retrace of this bottoming tail, that too would be an amazing area to enter UNH. So basically 290 all the way down to 260, 276, I would be accumulating UNH for a long play. Into FSLR. Now this stock bucked the trend on the day because most of the market gapped lower and continued moving higher. You can see here FSLR gapped lower and continued moving lower. And it was also on the back of news that Goldman Sachs right here upgraded the stock from 204 to 255. Barclays also increased price target for it up to 222, but yet the stock collapsed. And so why did that happen? And I'll tell you this right now. It's technical analysis. If you've watched us long enough, we analyze these charts with trend lines, with fib retraces, gap fills, etc. There's a number of different methods to use RSI to determine technically where stocks are going to go. And I'll show you why FSLR fell further today than what was anticipated. Okay, right here on the charts, you see this long-term declining trend line. When price today gapped lower and ran straight into this trend line, I went ahead and took a day trade on this stock because I knew that this area would be minor support. It would not be major support. It would be minor support. In addition, there was also factors with this consolidation. And then we also have another reversal signal here in verified investment that I was able to isolate right here in the charts, gave me insight that FSLR was at least going to have a bounce up good for a day trade. However, after I exited that day trade, price continued to fall down lower than where I got in. And the reason being is because we did not have any confirmation above this declining trend line. Notice here, this gap above, and then this price action here did not close above this candle. That all told me that a retrace back down to the trend line likely is going to go back beneath the trend line and close like we did today. And all because the confirmation signal dictated it being something like that. Now, does it mean that FSLR won't stop right here and continue going higher? No, it doesn't. It doesn't mean that necessarily. It just means that the probabilities of that support change from major to minor. So while this is minor support, we still could go down a little bit further and then bounce back up. But in essence, all this trading action was negated here on the chart. Any of that bullish sentiment on the chart has been eliminated. Now we need to reset, start again, see if FSLR can break back above this declining trend line and then confirm above that break. First support area is going to be gap fill right around 156.20. Into Microsoft. Microsoft, one of the big players in the market, and likely one of the other reasons the markets are pushing higher. You notice here today, we did accomplish a major feat on Microsoft. We closed above this December 12th high. Right here, that's a big significant breakout. Can we follow it up tomorrow? Time will tell. We need to see also another confirming move above here. If that's going to happen in the near future, tomorrow or the following day, now we're talking about all-time highs. All-time highs up here at 468.35. So very close on the chart for Microsoft. Incredible move and recovery on this stock so far. Now, keep in mind, too, now that we've closed above this declining parallel, any pullback to that parallel will be a buying opportunity. This area on the buying opportunity is 443.16, followed by this declining trend line right around 425. That would be a nice buying zone for a bounce back up in Microsoft. Considering it's gone up so much so soon, it makes sense for a pullback, but we'll see if this thing has helium in it or not and continues moving higher. Into AVGO. AVGO was on the verge of breaking down too, but look at where it finished today. All this candle now means is just a test candle moving down, and all that matters now is where price action closed. Price closed here. That all means bullish consolidation right into this resistance area of 231.33. Probability still at this point, since this bull flag is immature, probabilities still dictate a downturn in AVGO at the minimum down here to the 50% area of this parallel channel, right around 213.27. However, if we stay up here over the next 3 or 4 trading days, that bull flag consolidation could mature. And then next area of resistance is going to be up here, 245.67. All right, that wraps up Trading the Close, everybody. Thank you so much for tuning in. My name's Drew Dosek. Look forward to seeing you guys next time. Until then, I hope you all have a great day. Thanks. Bye-bye.